Ladies and gentlemen, good day and welcome to the Dhruv Consultancy Services Limited Q3 FY23 results conference call hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastupal Shah from Kiran Advisors. Thank you. Over to you, sir.
Thank you. Good afternoon, everyone. Welcome to the conference call of Dhruv Consultancy Services Limited. I would like to welcome management team, Mr. Pandurang Dandavate, Director of the company, Ms. Tanvi Avati, Managing Director of the company, Mr. Rajesh Sindhav, GM Finance and Accounts. I would like to hand over to Ms. Tanvi for the opening remarks. Ms. Tanvi, over to you.
Thank you, Vastupal. Good afternoon, everyone. I welcome you all to the Q3 FY23 conference call of Dhruv Consultancy Limited. Infrastructure continues to be a focus of our government, and we recently saw in the recent budget announcement that the government has announced a capex spend of rupees 10 lakh crore. That is 33% year-on-year increase in the FY24 budget estimate. This is allocated to sectors like railways, roads, defense, housing, water, metro projects. The capex to GDP is at an all-time high of 3.3%. So two sectors that stand out in terms of the allocation are railways, which is up by 51%, and roads, which is up by 25%. Even during the current period, the budget is fully utilized, and we all know that infrastructure development is at its peak in the country at present. Given 50% of the total allocated capex is earmarked for railways and roads, it is a clear indication on structurally bringing down overall the logistic costs in the economy, which are currently 14% of the GDP. The government has allocated 2.7 lakh crore to the Ministry of Road Transport and Highways. Our Honorable Minister, Shri Nitinji Gadkari, said that the budget allocation to the roads and highway sector will help build roads like the US by the end of 2024. This means that there is a huge scope for consultancy services that we offer. So we are working majority in the highway sectors at present. Consultancy services accounts for close to 10% of the total project cost. Thus, you can estimate the huge growth potential for our business. Here, empanelment is the key, and only qualified and an established player like Dhruv Consultancy have the opportunity to bid. And earlier, the ticket size was 2 crore, 3 crores, and 5 crores. Now 10 crores. We have recently bagged the Ganga Expressway for 22 crores also. So in the consultancy business, the bid is evaluated based on technical score, which has an 80% weightage, and financial score, which has 20% weightage. The technical score is based on factors such as the company credentials, the use of equipment, software, and the CVs of the key professionals, sub-professionals that we are proposing on our side. Our current score is 95 plus, and we are among the top 5 infrastructure consultants in the highway sector in the country. We are optimistic to get good orders from the estimated order outflow for the next 2 to 3 years. As said in the last conference call as well, that we are also entering into the international market, and we are very confident to win 1 or 2 bids with high profit margins. Currently, the company has been shortlisted in 8 projects out of the 75 expression of interest that were submitted. Namely the projects in Cambodia, Bangladesh, Zambia, Nigeria, Kazakhstan, etc. So the order inflow has been very good for the past few months. Since the beginning of FY23 till date, we have bagged orders close to 130 crores, which is the highest ever in the history of the company. And the order book as on December 22 stands at rupees 500 crores, of which the unexecuted is 296 crores. Now I request our GM Accounts and Finance to take us through the financial performance for the reported quarter and 9 months of FY23.
Thank you, Tanvi, and welcome to everyone. I'm just disclosing the financial highlight for the 9 months closing 2023 as well as the Q3 result. The company for the 9-month performance, the total revenue of the company has gone up by 10% from 54.77 crore to 60.16 crore. At the same time, the total expenditure has gone up by 16% from 47 crore 23 lakhs to 54.94 crore. So there is a net increase in the expenditure by 7.71 crore. At the same time, the profit after tax has gone down by 22% from 6.9 crore to 4 crore 72 crore. The major contribution in the increase in the cost on account of the employee cost by 15%. There is an increase in the finance cost by 40% and the administration cost by 13%. So this has been impacted the profitability of the company in this 9 months result. And the main cause of the concern in the reducing the profit on account of there is an increase in the professional fees by 4 crore and the ECL provision by 90 lakh rupees. At the same time, there is a reduction in the cost of the various other item like travel expenditure, side expenditure. For the period of 3 for the 23 as well as comparable with the 22 of the last year, the company has made a total revenue of 22 crore against the last year is 20 crore rupees. So there is a net increase by 8% in the revenue in the Q3 result of the vis-a-vis of the last year same period. The total expenditure has gone up by 13% from 18 crore to 20 crore. So there is a net increase by 2.5 crore rupees in that case. And the margin, profitability of the company has been gone up from 1 crore to 1 crore. Yeah.
Sir, I request you to please speak a little closer to the mic because the voice is sounding a little muffled and in between it's going down, sir.
Yeah. So the profit of the Q3 for the FY23 against FY22 was increased by 76 lakhs rupees from 1 crore to 1 crore 82. Because the main reason for the increase in the profitability on account of that there is a excess provision lying in for the assessment year 2021, which has been necessary entry has been passed in the books of account. So these are the results for the Q3 as well as the 9 months. Any question for that?
So we may go ahead with the question and answer session, sir?
Yes, yes.
All right. Thank you. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mukesh Panjwani from Value Securities. Please go ahead.
Yeah. Hello, sir. Good afternoon. Sir, as we know that a lot of work is going on in road infra in India, but we cannot see much of growth in Dhruv's revenue in current financial year. Like last year, it was around 75 crores, and in the trailing 12 months, it is 80 crores. So why we haven't grown in a reasonable manner, as even though our base is still small?
There are 2 reasons. First reason, if you compare now we are already ahead by I think 50%.
Sorry to interrupt, sir. There is a little disturbance on your line and you're not clearly audible at the moment.
Am I audible now?
Yes, this is very good, sir.
Yeah. So there are 2 reasons. If you see the 9-month to 9-month comparison, there is a marginal increase in the top line. I'm accepting it is marginal only. Secondly, the main reason for you can say not reflecting the things in our books of accounts, the progress of the projects, is that it is a typical government budgetary systems in which the even works are also awarded in the Q4. This Q3, all the results are outcome of Q2, and Q2 is mainly dominated by the monsoon season. So in the monsoon season, the sites are slow, our revenues are slow, even issuing the work orders also on little bit on slow track. That reflects on Q3. Then Q3 and Q4, very good. Historically, our revenues are 60 to 65% in Q3, Q4. So I am not worried about that. We will definitely doing better if you are seeing at the Q4.
Okay, and sir, how should we see our company going ahead, like 3 to 5 years from now, in terms of revenues and in terms of margins?
See, if you see our last year's unexecuted order book, it was hardly 150 crore plus. Now today it is double, almost 300 crore. We are touching unexecuted order book. I am underlining in a bold line, unexecuted. Still 1 quarter has to go. So this unexecuted book is giving us assurance of next 2 to 3 years visibility of the top line as well as the profits. This is straightway I am talking about the existing order books. As explained by our MD in the initial talk, we have bidded very aggressively in terms of expression of interest. First, in the international consultancy market, almost 70 plus bids we have already submitted in form of EOI, and we are very much sure in current calendar year we will enter into international market in an aggressive way. That is going to give us the good visibility for next 3 to 4 years. Once we enter, we will be touching the skies in international market also, because our credentials are very, very strong. One, and we are the only consultancy firm there who are public limited and listed on the stock exchange.
Okay. And sir, what should be the average order size when we talk about international market? And what about the margins?
See, ticket size there is 20 to 25 crore in terms of INR. Of course, we will get in dollar. But ticket size is almost getting double in international market. And of course, then profitability is also very high. I am expecting our unexecuted order book at least 3 times in next 3 years if we successfully go ahead with the international bidding.
Okay, that's interesting. Okay, then that's all from my side. Thanks a lot and wish you all the best.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Tushar Ragatate from Kamakya Wealth Management Private Limited. Please go ahead.
Yeah. Good afternoon, sir, and congratulations for your good set of numbers. So my question is on your order book. You mentioned back in Concall that you submitted a bid of 700 crore of orders. Firstly, sir, what is the update on the same? And second, you also mentioned that you're bidding on the international order. And so in that, where is the process as of now? So when can we expect the conversion of all the bids which you are given?
Can you repeat first question? I missed out.
Okay. So you have submitted in the last con call, you mentioned you have submitted a bid for 700 crore worth of order.
Yeah.
So I just wanted to know the update on the same, this 700 crore order and also on the global orders.
Yeah, that I will explain now. The first part, 700 crore bids are submitted. The process of scrutiny is now expedited, of course, considering the 24-25, the election year. The results are coming much faster than earlier. Normally, results of the bidding comes after 6 months, but now the time has come down to 4 months. It may come down to 3 months in next financial year. So we are expecting at least 20% of the success. So additional 150 crore plus order book should be swelled in next 4 to 5 months. This is part 1, Indian market. And global market, the process is guided by the World Bank, you can say, directives and procedures, which is internationally accepted. And there they first go for expression of interest. It is a sort of shortlisting. And once we qualify in that is a technical qualification, then they issue us the RFP, that is request for proposal document. And then we have to submit our financial bid. Unfortunately, the corona was there all over the world, not too hard hit in India, but at some part of the world the corona was there, and the procedure was little bit slow on evaluation side last calendar year. But current calendar year we can expect the results in 8 months when we submit from the date of submission of EOI till getting the result, which was previously almost I can say 18 months to 20 months. So that time has also reduced because the corona is now almost zeroing down all over the world.
Fair enough, sir. Sir, what sort of revenue and margins you are targeting in the next 2 to 3 years?
Top line, as I explained in earlier question, if unexecuted order book today is 300 crore, which is to be completed in 2.5 years only. So definitely we will be doing much better in terms of top line in next 2-3 years. Order book I already explained. PAT and EBITDA are bound to increase for the reason that all the initial mobilization expenses are already there in Q3, and revenue is yet to come because the billing cycle is say 60 days or sometimes 75 days. So Q4, the government normally try to end the budget on 31st of March. All the expenses should be in place. So Q4 should be good in terms of revenue, where the expenditure is already booked in Q3. That is one thing. Secondly, if you observe the budget at micro level, there was provision of about 2 lakh crore rupees in last current financial year, that is 22-23 for the highway sector, which is exhausted or expended in initial 9 months only, and they have made additional 20% for the current financial year. So from 200, it is already 240 crore. It is 40 lakh crore rupees more for the current year. So that is indicating how the sector is growing speedily ahead of the budget provision.
My next question, you mentioned that the NHAI contribution to the order book is increasing. Sir, is my understanding correct that the working capital requirement will gradually reduce going forward next 2 to 3 years?
Working capital requirements definitely will go on higher side. We have already tried for the preferential issue, and we are hoping to get it closed. Partly it is successful, partly it is yet to be working capital requirements are there definitely, because on the debt side we have the limitations because of the banking norms and all other things. Still we are in the process of getting additional 5-6 crore rupees sanction from the Punjab National Bank in current financial year only. So working capital requirement is definitely going to get on higher side considering the international assignments.
Sir, in terms of competition, like the top players, so where do we stand in terms of technical capabilities and all such aspects?
If you see our historical records that are available on websites also or various social media postings, we were scoring 88-90 marks before I can say COVID. During COVID, we jumped from 88-90 to 90-92. And post-COVID, considering the 4-laning completion and a similar type of experience and better CV we got from the HR market, today we are scoring 95 plus marks out of 100, which is, I can say, quite admirable. The competitors, we are in the elite group of competitors. So 95 plus, hardly 3 or 4 competitors are scoring nowadays, and we are in that elite group. So chances of getting the works are higher now, and also chances of getting the works with better margin is also now on cards.
So you mean to say there are only 2-3 players of the technical?
There are 3-4 players who are good marks or equal to us. We are trying to touch to 96 or 97 in current calendar year. But I can name it also. ICT is there, RV is there, SA Infra is there. They are well established players, and they are also doing equally good as we are doing.
Okay. Is there any competition from L&Ts or the big infra companies in terms of?
No, the infra company, they are in construction only. Ours is purely a consultancy. Purely a consultancy. It is a service sector. In the religious language, I can say we always play a role of Sri Krishna in Mahabharata. We cannot be Arjun.
Fair enough, sir. Sir, what would be the difference in terms of orders, the companies you named, 3-4 companies, in terms of size and orders? What would be the difference between ours and them?
Some are below us, some are above us, maybe 10-20% plus or minus. 1 or 2 marks here and there. That depends on how you submit your bids. So I can say we are at par. The only big difference between other companies and we is that we are the only company listed on public limited and listed on BSE, NSE both.
Okay. Sir, in terms of employees, what is the average experience of employees?
See, employees are of 2 types. One is a core, you can say one is a permanent employee. They are associated with us since long, say 15 years, 20 years or more than 10 years. So they are working mainly in the head offices. They are working in the designs, they are working as a coordinator, they are working as a CFO or non-technical section, business development, वगैरह. Second chunk of the employee are on site. Say I can say 70% of the employee are on site. Their appointment is purely on contract basis. Once the project is over, their assignment is automatically over. Automatically, it is as per the RFP only. That is as per the contract document only. So no liability, no legal or financial liability once the project is completed.
Fair enough. So my last question, you are diversifying into other businesses as well. So when can we expect the material contribution of those diversification to our revenue?
See, solar we have kept on the back burner because of the industry slowdown in that sector. And solid waste management, we are definitely trying very hard. But I can say, considering our core sector's opportunity and now the opportunity is opened in the international market, we are not very keen on diversification as on now with very harsh push. Solid waste management, as and when it comes as an opportunity, we are bidding it, and we are sure that presently we have only 1 or 2 works in our order book. We are sure that we will get additional 4-5 works. And we are first trying to build our own credentials on that in that sector.
Okay. Sir, just one concern, like consultancy is a high margin business. So I just want to understand whether this diversification will have some drag on the existing business of yours.
No, that's why I am saying, suppose now solid waste management out of our unexecuted order book of say 300 crore, it's hardly 2 crore. So it has not much impact on that. And we will, once we get sizable work, we will try to prepare a separate balance sheet, or maybe we will take it in the series name if the project allows to form a SPV.
Oh, fair enough, sir. That's it from my end. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. We have the next question from the line of Nitya Shah from Kamakya Wealth Management. Please go ahead.
Yeah, hi sir. So I just wanted to understand, I was noticing in the investor presentation that at the peak your employee count was at around, you could say 480, nearing 500, and now the total number of employees is 350. So
yeah.
I want to understand that considering the number of orders that are increasing and the work is going to significantly increase, what is your target employee headcount over the next 2 years? Like I am expecting the number of engineers and experts hired will be much further, and will this cause a big drag in margins due to a rise in employee expenditure as it was visible in this quarter also?
Good question. Basically, the reduction in employee number is because, as I explained earlier, because completion of the project. The project, our assignment in the project is in 2 parts. One is that is construction starts and construction ends. So that is about 3 years maximum, 2.5, sometimes 3 years. Then another 3 to 4 years is a defect liability period, wherein we have to observe the defects on the project which is completed by the contractor or concessionary and which is supervised by us. And it is to be brought to the notice of concessionary or contractor as well as to the client and our duty is to get it repaired or rectified. Now, for that second part, we hardly need 10% of the employee. Says 20 people were there, then only we need 2 people. So drastic reduction in number because of majority works assigned in 1920 and 2021 completed, and drastic reduction in number. Now coming forward to the new orders and order book and international market, the ticket size has been increased in the new order book. If you see in micro level, ticket size was 5-6 crore, now it is 7-8 crore. One assignment we got of 21 crore. International market, of course, is 20 crore plus. But touchwood, the manpower requirement is same for the ticket size, additional ticket size works in India. 20 means 20. Only what we have to add is the added qualification in that employee that we are getting from the market. Say if they are comfortable with say graduation, now they will ask for post-graduation. If they are comfortable with post-graduation, they will ask for post-graduation 20 years experience. So only they will increase in quality of the manpower, not in number of the manpower, and then manpower cost doesn't increase proportionate to the ticket size or work order. International market is very, very interesting. The manpower requirement is almost, I can say, half, because majority of the works are to be done are from the head office or it is an intellectual work.
Right, sir. So I can expect a sort of operating leverage also kicking in due to, less number of employees required to do large number of contracts, right?
Yeah.
Is my understanding
correct?
Correct.
Correct.
Okay, sir. Thank you. And my second question was regarding the competitive scenario. I just wanted an understanding, like say companies like RITES, which is a PSU, and your other big fours like Deloitte, PwC, are they also involved in infrastructure consulting as we are?
I have to explain it. Deloitte, E&Y and PwC, they are dominantly the financial consultant having very short or very weak arm of technical. Normally they outsource the technical things for the consultants, small size consultants, but their main assignments are advising the government on policy matters or financial close for the government companies like MSRDC or KHRDC. That ILFS was previously working, their consultancy wing. So the PwC and PwC, E&Y, they are basically the auditing firms. Now the RITES is the India undertaking, and railway works are by default awarded to them only without tender.
Okay.
So of course their order books are very strong and their profit margins may be very high and their turnover may be very high. All other things are very high because entire Indian Railways, including their all subsidies and other things like metros or bullet trains or everything, the rights get the first right. And very less cases they tender it. So we also are trying to enter into this metro and railways now, where the competition is available for 20-30% area. Since the budget provision current year is highest for the railways, we are desperately trying to enter into railways with our present qualifications.
Okay, sir. And my last question, sir, was on the guidance now. Say, considering the infrastructure boom is going on in India and railways and road construction, can we expect the current 500 crore order book to reach to say 1,000 crore order book by FY25?
Definitely.
Okay. Thank you, sir. That's it from my end, and I wish you all the best.
Thank you.
Thank you. The next question is from the line of Devesh Srimali from DS Investment. Please go ahead.
Yeah, hi, good afternoon. I'm sorry I joined late, so missed the initial commentary. My first question is around the sustainable margins, whether quarterly or annualized basis. Can you give some color on that, please?
Tanvi, can you answer?
Can you repeat the question? There was some disturbance at my end.
Sure. So, I joined late, so I might miss the initial commentary. I was just looking to understand what is our sustainable margin, whether annual or quarterly basis, and is there any seasonality in it? How do we read the numbers?
Yeah, so since you joined late, I think sir already covered this point. During monsoon period, that is the quarter one and quarter two, the progress of the work is usually slow and the flow of orders is also less. So in Q3, the orders come in our hands, and from Q4, the revenue recognition actually starts for the newly awarded projects. And initially, there are mobilization expenses also. So overall, if you say for the total projects, the margins are between 10 to 15%. And these are for the projects that we have already bidded or that we have already received. And for Q1 and Q2, it may differ, and Q3 and Q4, they are slightly on a higher side.
Got it. And annual level, what is the guidance that you sort of see going forward, 24, 25?
So we are expecting the same increase, a stable increase that you have seen in the last 1 or 2 years since the infrastructure development at its peak. But we are expecting an inflated order book this financial year because this is going to be the last year before the election at the central government level. So the order book that is there right now, the order book is 500 crores. We are expecting it to swell this financial year. Even in quarter one and quarter two, we can expect some results there. So this year is going to be very good for the entire infrastructure industry.
Lovely. I think I was looking more from a margin because 16 to 19 we did about 26-27% margin. After that we have been sort of quite up and down. So 24-25, can we get back to that 26-27% margin range?
Yes, that is the reason why we are now shifting our base to international projects as well, where the margins are 30% and above. So once we start getting international orders, of course, it will not be 16 to 19%. It might be much above also. So we need to keep a balance of the domestic and international orders. International orders, as Sir rightly mentioned, they are more of intellectual, less manpower required. Even though we consider the exchange rate, and of course income will be in dollars. So if the dollar rate goes on increasing, our income also goes on increasing. So that advantage we will definitely get. And as far as margins are concerned, as I said, they are close to 30% for international orders.
Got it. Thank you for that. And the last one was more around the talent recruitment side.
Yes.
In the current situation when there is infra boom, I'm sure we are chasing the same skill set that many other companies are. Do you see any challenges on that part, or do you think we are well covered there?
We do have a very strong recruitment team in-house itself, whereas most people are dependent outside. And the major advantage, one, is that since many retired government officials, they retire at the age of 58. They see this company as a second home because even Dandavate sir has worked in the government previously. So they have a certain amount of comfort coming back to us, and their CVs are so strong that they become highly competitive in the market. So as on date, we have not faced this problem even with the highest competition. And even in the private sector, so the work culture and the comfort of working that we give here is our USP amongst our competitors. So even those who have come from other competitive firms and joining us, being a part of a listed company, because we have advantages like giving ESOPs. So they have a certain inclination towards Dhruv Consultancy. So as on date, we have not faced this problem.
Perfect. Thank you for that.
Yeah.
And one additional would be,
Yes.
You said we are looking at 500 crore order book soon. Now, to sort of reach there, do we need some working capital enhancements, or how are we placed around that money raising part?
Yes, right now our total debt is 16 crores. But yes, if there is a swell in the order book, we will definitely require additional working capital. But the requirement, since the initial mobilization expenses and the first bill takes about 3 to 4 months to get realized in the account. So that short gap needs to be fulfilled. So not much of a major issue, but yes, the working capital requirement will always be there.
Lovely. Thank you. Thanks a lot and all the best.
Yeah, thank you.
Thank you. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Himani Oban from Suraj Research. Please go ahead.
Hello. Hi, good afternoon, sir. Am I audible?
Yes, you are audible, ma'am. Go ahead.
So my question is, government is focusing on infrastructure capex on the next 3-5 years. Can you share our size of opportunity?
Yes, surely. There is one document called NIP, National Infrastructure Pipeline, published by Task Force of Ministry of Finance, Government of India. They have shortlisted or analyzed and made the provisions just like Planning Commission was doing previously for next 7 years, for 5-6 years, starting from I think 2018-19. The document is available on the websites also. It has made a provision of 100 lakh crore rupees for infrastructure development in India in 5 years, starting from 18-19. So out of that 20 lakh crore, that is the 20% of the provision is only to the highway sector. Now, when it started gearing up, unfortunately COVID came. So the expenditure, or you can say tenders awarded till date are only 10 lakh crore rupees. And 10 lakh crore rupee tenders are to be awarded in next 2 years.
Sorry to interrupt, sir, but the line for you is not very good. It's difficult to hear what you're saying. There is a little disturbance.
Shall I repeat everything?
Also, the last about...
So
10 lakh crore rupees orders are issued, and 10 lakh crore rupees orders are to be issued in highway sector only. So the slowdown, that 10 lakh crore remaining is to be issued in next 2 years, this next 2 financial years. So this slowdown is mainly due to the COVID. It should have been at the 14-15 lakh crore as of now, but it is minus 4-5 lakh crore rupees because of the COVID impact in 2021 and partly 21-22. So opportunities are huge for every infra. Mainly consultants are the front runners or first, you can say, advantage taking sector. So we are expecting everything to be doubled in next years.
Okay. Okay, sir. And my next question is, can you please share your order book breakup in HAI, State Highway?
Yes, we have the major clients are 2 only. One is NHAI, that is National Highway Authority of India, and another is their apex arm, that is Ministry of Road Transport and Highways. Both are Government of India department and companies. So today broadly 60% of our orders are from NHAI, which is a better client in terms of payment, in terms of systems, and also in terms of ticket size, because they are doing 8-lane, 6-lane work, expressways, etc. North order book is roughly 30%, which is dominantly doing the 2-lane or 3-lane roads. So ticket sizes are a little bit smaller. And only 10% of our order book is from other parts of the sector, like one is Ganga Expressway we got from UPIDA, that is government, UP government. Then few of the orders in Maharashtra. So other state highways or other clients are only 10%.
Okay. Okay, sir. And in which states will be more opportunities in highway?
See, today, 4 years back, our presence was only in Maharashtra with little bit in Gujarat. Today we have the presence in 28 states of India out of 30. We don't have the presence only in 2 states of North, that is I think Nagaland and Tripura. Else we are spread all over the India. So opportunities are not state-wise, because it is a centralized Government of India task force and Government of India vision they have done. I can say it has nothing to do with the states. It is spread over all over India. In fact, more on the northeast part of it.
Okay. Okay, sir. And my last question is, please share your order book and execution timeline.
Order book, as explained, it is roughly 300 crore unexecuted to be completed in 3 financial years. Yeah.
Okay. Okay, thank you so much and all the very best, sir.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1 at this time. The next question is from the line of Yashwanti Kedkar, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. I just wanted to understand if you're talking about the international.
Sorry to interrupt. Ma'am, you're not audible. If you could please speak closer to the mic.
Yeah. So you were talking about the entry into the international market where the margins are comparatively high. If we see the current quarter and the 9 months, our margins were in the reported quarter, the margins have come down, but on overall basis, for the 9 months, it is around 13% and odd figure. So with this international contribution coming into account, not for the current year, not for the FY24, but from FY25 onwards, where do you see our margin to stabilize?
Tanvi?
Yeah, so the assignments that are being awarded internationally are for a period of 6 to 7 years. So maybe not in 2 years, but in 3 financial years, you would be able to see the effect. With respect to international market, there that, as sir also rightly explained, that the turnaround time is slightly slow. Say it takes about 8 to 9 months for a order to get converted into for a bid to get converted into an order. So 8-9 months goes there. After that, the construction period goes up to 3 years, and then the maintenance. So it will take 3 financial years for the margins to actually improve there. But in addition, we are not only dependent on the international market for our margins. Recently, we have posted on our on the exchange website also that we have been awarded with 3 states. We have been awarded with projects in 3 states for traffic surveys under IHMCL, so Indian Highway Management Corporation Limited. So for these 3 states, we are going to carry out 24/7 traffic surveys. So projects, earlier also we had such a project like the Mobile Bridge Inspection Unit, which we, through the Mobile Bridge Inspection Unit, we were inspecting all the roads where margins were 40 to 50%. So such kind of expertise works are also coming up along with the current work that we are doing, where margins are 40 to 50%. Projects like traffic survey, like MD. So now they are also exploring that this Mobile Bridge Inspection Unit be used in the railway, and we have already seen the amount of budget allocation done for the railway sector. So this is the right time we target the railway sector, and we will be a new entrant there because there are hardly any consultancy firms working in the railway sector. And we have an advantage of good experience in highway sector. So such projects, along with the international projects, we can definitely see an improvement in the margin in 1 or 2 financial years also.
Okay. And so what will be the quantum of this capital monitoring consultancy services going forward in our order book?
Yeah. So these assignments are for 1 year only, but they are extendable from time to time because need of traffic survey is going to arise if infrastructure development or road development is required. So traffic surveys is never going to end. So the total tune of these 3 states that we have received is close to 10 crores.
10. Okay.
Yes.
Okay. Yeah. Thank you so much.
Yeah.
All the best for future.
Thank you so much.
Thank you. Participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Yashwanti Kedkar, an individual investor. Please go ahead.
questions I already have. Thank you, sir. I guess that's it.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 at this time. As there are no further questions, I would now like to hand the conference over to Mr. Vastupal Shah for closing comments. Over to you, sir.
Thank you. Thank you for joining the conference call of Dhruv Consultancy Services Limited. If you have any queries, you can reach out to us at research@kirinadvisors.com. And once more, many thanks to management team and all the participants for joining the conference call. Thank you.
Thank you very much.
Thank you. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.